This is a 30-minute video clip from the Clinton Board of Selectmen meeting of August 21st, 2019, discussing a proposed program to temporarily abate taxes on business capital investments that would allow businesses to start to see a return on that investment before that investment is fully taxed. A small but important part of the discussion involves an ad hoc tax abatement that was granted to Liberty Place Affordable Housing Limited Partnership, without which the partnership would have been liable for taxes of $55,000 a year. The tax abatement fixes Liberty Place's annual property tax at just $3,500 a year plus a 3% increase each year for 40 years. That is an initial sacrifice by Clinton of over $51,000 in taxes annually for 40 years. Who benefits from this break is not easy to sort. Their tracks are well covered in public records, and FOIA requests go nowhere. But Clinton Housing Inc. lists 66 Carter Hill Road in Clinton, which is Arthur Isaacson's home address. But clearly the property on which it was built produced a nice profit for two of Clinton's politically privileged. It was bought by John Giannotti on April 27, 2012, and transferred to an LLC on 6/15 of that year. And then in 2017, it was flipped to Liberty Place Affordable Housing for $500,000. That's a $365,000 or 270% profit in just 5 years. And who is a Liberty Place LLC? None other than Republicans John Giannotti and Mark Richards. And while they benefit, what will this abatement fully cost Clinton in lost revenue that taxpayers will have to make up? Assuming taxes go up just 2% a year, and the Liberty Place fixed tax only goes up 3% a year as agreed, by 2058, instead of a $119,000 tax bill, the partnership will pay just $11,000 in property taxes. Over 40 years, that's a cumulative of more than $3 million Clinton taxpayers will have to offset in additional property taxes or reduced funding for education, public safety, and infrastructure. This is a Clinton rogues gallery of political wheeling and dealing for privilege and profit, which voters will do well to remember on Election Day in November as town employee and incumbent Carol Walter and Board of Zoning Appeals Chairman Mark Richards run for the new town council, and former First Selectman Bruce Farmer runs for the Police Commission in an effort to force out a more qualified incumbent, with no axe to grind against the police department for arresting a Republican police commissioner in 2016. Carol Walter, who was on the Board of Selectmen when this abatement was granted, and the only selectman remaining from that time, is also the only one expressing any reservations about this proposal at this Board of Selectmen meeting. Since it doesn't benefit any of the members of the Republican tribe, is apparently a, quote, can of worms, unquote, and of no interest to her. Now she and Mark Richards are candidates for the town council in November. Do voters really want these two foxes in the henhouse? Action?
New business. I have a correction to make on the agenda, so I apologize. Number 10 is not just an executive session on discussion of household real estate. It would be discussion of abatements. So I would be looking for a motion to amend the agenda.
So moved. Second.
Discussion? All those in favor?
Aye.
Alrighty, next we'll move on to the discussion of abatements. So I have asked our tax collector Lisa, our previous tax collector Melanie, Donna is here from the
Assessor's office.
We have Sue, I didn't necessarily invite Sue, because Sue's here anyway from the finance office. And this is more of a,
And
and I'm
John Allen.
John Allen, the chair of our EDC. There's actually three components to this conversation, four components maybe I'll say. One is, I would like to see next week that we adopt some sort of abatement program. We've been kicking it around. EDC has been kicking it around. We have Kevin Bielmeyer from CERC, who has picked up where Sadie left off on the draft of the abatement program. So you have it right now. I'd like you to review it, and I won't have legal review it one more time, but I think we need to move forward at this point. And by creating a policy, it allows us to convey to the business community that we're open for business and we're welcoming them, but also that it sets a standard for how we're going to engage with developers and or local business owners who are looking at this. So that's one thing. Two, as part of that, as I discussed, looking at abatements for existing businesses and then looking for businesses coming in as well. So right now, we had a request through the developers for Unilever building, and we don't have a name for the proposal yet, the project, but Donna is going to have to be working with the tax office to determine potential value of proposals such as that, which is hard. It's going to be a real challenge, and it's similar that we ran into with the Indian River project, to look at a master plan and say, okay, this is the potential of it, put a number out there. I'm just going to read into what I want to cover as well. So the recommendation is that we adopt a abatement policy, and the advantages of that are going to be that we're sending a signal to the prospective developers that Clinton is a town serious about economic development. It really presents a no risk, as all the abatements are subject to Board of Selectmen approval. It reflects transparency and fairness, and it removes potential criticism, and if any backroom deals is on the books, everybody understands it clearly. It allows you to incentivize the types of growth that we want to have. And it's going to allow us to incentivize where we'd like to see that growth specifically. Obviously, we have 7 different focus areas in the plan of conservation development, and that is where we should be focusing the growth until we update that plan again, unless we've determined that other areas of town really need that focus. But I think that the town plan has done a good job of capturing those areas, both in terms of where the investment and infrastructure already exists and where we should be expanding upon it. It can be simple in the criteria. If met, the applicant fills out a short down form that they can download, and then it's subject to approval. There's no guarantees, but it provides a process. And then it provides the economic development tool for the town, which I think we need at this point. So,
Subject to whose approval?
Board of Selectmen approval. The same with the abatement, I guess, with the Liberty Place, that was a Board of Selectmen approval, although I would prefer.
I was looking at this though, it says proposed to be adopted December 1st, 2019, there won't be a Board of Selectmen.
No,
That's town council.
that's town council. But at this point, we're getting pressured to make some decisions on abatements, and the challenge is if we continue to do one-off abatements, we're setting some sort of standard. And again, I go back to the fact that we want to make sure there's some sort of fairness involved in this process, that everybody is coming to us and it's considered a level playing field. So it's a little challenging. I'm going to address Lisa from the tax collector's office and Melanie as well. It's challenging for the tax collector's office to administer these types of programs. So I was wondering if you could speak to that a little bit so the board understands a little more.
Well, I'd like to change the word abatement to fixed assessment because it's more of an agreement, because we have state statutes that we can use, 1265B for real estate, 1265H for personal property, that are dealt more on fixed assessment than an abatement.
And the recommendation does base upon those two parts of the statute.
Yeah, okay.
So I think the vernacular is mixed up.
Yeah.
We still want to say, wait from the word fixing, because we figured fixing in this town would not be a
I know. Unfortunately,
embraced term.
that's the word
Well,
that's in the
but
statute.
that's a statute term.
That's a statute term, and there's a big difference between a fixed assessment and an abatement
Right.
on how that affects.
You're right, the wording is correct.
Yes.
How about adjusted?
But I also think you need bigger picture from whoever it is applying for this, like what their stake is in it and what they have to offer and how they can afford to do what they're doing when they're asking for such things, or what they can do for the town.
And that's where the pro forma comes into place, because you want to make sure that should we give an abatement, A, that they have the ability to continue the project, but then also what are we doing to say if the project does not come to fruition, you've just written off potentially 5 years of taxes, and how does the town recoup those as well? So there has to be mechanisms in place.
And a clawback, yeah.
From your, if you want to, just, I know it's been challenging with the other abatement, I don't know if you want to elaborate on it so that the board understands really the realities of how.
I'll let you answer that one.
Which one we want to talk about? Are we going to talk about the Old Warren School with Greylock, which is everyone familiar with what is being given to them, and the timing of what it is given to them. So if you haven't reviewed it, maybe you would want to get copies of that and look at that, and we can have a discussion about that.
The board was fully involved in that abatement, so they should be well versed on
That's 200,000 over 5 years.
max.
Max.
Right, and when we looked at it very closely, it is only on the retail space, and it probably will be taken up within the first year, max 2 years, which from, I think, our point of view in the tax and the assessor's office, because it's an abatement, it's really good to get it done, you know, and it's very helpful, I think, for the company or companies that you would want to give an abatement to, is that, yeah, you get it up front and you get it done. And in this case, because we don't have any tax revenue from the old school yet, so if you get the abatement in the first year, it's not like we're taking anything away. So we have to keep in mind our budget. This is a really important part of this, because as more abatements you give, more exemptions you give, the higher your mill rate's going to be. Okay, so you know, and there's going to be a lot more companies coming to us. I mean, I'm thinking the Boston property, 145, Old Post Road. There's a large parcel there that may get developed eventually. Now, how much can the town take away from their dollars, tax dollar? That's number one, and treating everybody fairly. That's important. And we're going to be going through revaluation in the 2020 grand list. I think that's important to note on properties. And the other things that we have to offer the town, it's my understanding that possibly those who bought the Unilever property are looking for some kind of reduction in permit costs.
Yes.
So that's something to look at as a whole as well.
That, we're not actually able to do that. The Planning and Zoning Commission can weigh certain elements of it, but, we've had other developers come in and say that they'd like the building fees waived, because in other states they do allow that, but we cannot do that in Connecticut. So the planning, that discretion falls to the Planning and Zoning Commission.
Right. But in the office, which gets very interesting, is there's no real mechanics for, doing this, it's not a program. And we have to be careful, Sue and Lisa and Donna, in that this next year, we probably need to put it on the budget. Okay, so you flip to the back page of the budget, and we have a list of things like the town benefit, and then we have the fireman exemption. It's clearly there that you are losing,
You have to show where it's going.
we're going to show where it's going,
Yes.
right. Currently, what we don't have there, and this will be the first year, is the property on Liberty Street. It's the housing property. And this year, the housing through the management company they're paying is about $3,000, but their taxes were $53,000. And that agreement by the Board of Selectmen was for 40 years.
Can you do a 40-year thing? We're doing 10, right, in the state?
That's
12
at
dash
830, it's at 830G, so it falls under different
4 years?
40 years. What's concerning is it does go to market rate after, I think it was 20, I lost track, 25 years. So that means it becomes an investment type building after 25 years, yet they will continue to pay no taxes in the town up to 40 years.
So it's $3,000 this year that they'll owe. Next year is $3,000 plus 3%. The year after that, it's that number plus 3% as it goes on. So we would manually have to do this, but we really got to make sure that it's in the budget so that we are, when we set our mill rate, that we set it correctly, because of all these, 60,000 here, 50,000 here, 50,000 here, this adds up. You start talking about $250,000 in programs that we are supporting through our budget. We need to make sure.
So I think when we start talking about abatements, what we're looking to, and this comes down to what kind of abatements we're looking for. Clearly there's a cost right now, so there's some of the properties that are not bringing revenue in, except for very minimal in terms of taxes. So starting that, keeping that as a base point, and then knowing the development over time is going to increase in taxes as they build and grow. The idea is that you help them support that, you might even it out a little more so it's not such a large hit, and then so they can accommodate for it, and at some point they get to 100% of the development is paying taxes to the town. So
It's also that, kind of in context, the general theory is not so much taking away what the taxes are we're getting right now and using the 145, it was like 80 grand a year in taxes for that pad or something like that. It's very minimal. So, the theory going into the town would be if they made it $160,000 worth of taxable income to us, we would start looking at that $80,000 delta and figure how much are we going to get back to them. And then we get into TIFs eventually, if we actually could get more sophisticated. But it's more giving an abatement on the improved or the increased tax revenue, not taking away from the bed.
the bottom.
The bottom. It's thinking that way so it's easier to project. We got this money, it's not going to go away. But as this goes up, let's be much more cautious in figuring how much we're going to take for that first 5 years. And then, of course, building it out due to the needs for the tax abatement in the first place. Like for here, it's like brownfield, right? For the Morgans, and they need the money really because they got a $400,000 bigger hit.
Environmental.
You got to do that immediately, so that's why it's good to take the 200 grand off early on. And then but those are things that with the tax program will be custom made. Really, the tax fixing, whatever we want to call it. We can't use the word fixing in this town. It just doesn't work.
I know.
But that, it just gives us kind of like a formal template to work inside. It will all be tailor-made to this thing, but it's not cutting back on what we're currently getting.
Right, the old boarding school, though, it will not.
Well, it's zero anyway, right?
Right, and it won't take effect until a certificate of occupancy
Right.
is issued for retail space. So it doesn't take effect now, and they will be paying taxes October 1st or whatever. Have they actually done a final sale? Okay. Do we anticipate a sale date yet?
No, they still have to get their process through planning and zoning approval, so
Do you know if it'll be anytime soon, like, or
they have to get their process, through the approvals process through planning and zoning. I just want to speak a little bit to the costs of the municipality. So obviously there's the cost of the staff to process this information, but then also as the developments expand, there's a cost to the services we provide, the roads for the DPW, the police department, the fire department, and that becomes a little bit gray in terms of how you recoup those. So the best we can do is get a evaluation from other towns as to how they configure that into their abatements. So when you evaluate your abatements, you need to have a certain percentage that you're always anticipating doesn't get removed from the books because of that.
Christine, are you addressing anything that you've gotten some notations from, I guess, the owner of the Unilever property? Are you going to be talking at all about that today?
I think because I feel as though that we probably need to have something a little more solidified.
Good.
And
Good.
also I'm running into some confidentiality related to that, and
Okay.
things that they're not ready to disclose. So, but I want to get a sort of a conversation on the books and some thoughts from the Board of Selectmen on how we're going to move forward. Because this developer is aggressive and is moving forward very quickly, and we do need to get an answer to him as to how we're going to address this.
We'd like to know what you're doing before we address it.
That would be in their proposal, their overall proposal. Generally, you have a program, a fixing or an abatement program, and/or they just come to you with a general proposal, and you can take it or leave it, or you can negotiate it similar to you would do any contracts. But they're looking for guidance from the town. What would we be willing to accept? Right off the bat, part of their proposal exceeds the 10 years that's allowed in the statute, so I have to go back and say, I'm sorry, that's not something the town's willing to do. I think in terms of what we're talking about with the abatement through with EDC, and I generally prefer the 5 years. We sort of settled on a 7-year max. So you guys have gotten this document before, but if you can read it over again and come to a better conclusion on it.
We had 10, didn't we?
No, we
No,
just got it.
Said 7.
I prefer 5 myself.
My big concern is the reaction of existing businesses in town already who've got nothing. And, I mean, the whole point of bringing in new businesses is to bring in the revenue that they will provide, and to, off the bat, negate that revenue while providing all the town services. I don't know, I think this could cause a lot of unrest, and I'm very, with difficulty reading
Yeah, we have
this
to get
printout from Bloomfield, where they're doing a Cigna abatement. And it says here that the primary reason why they approved it was there were high-paying jobs. Well, Cigna, yes, is going to provide high-paying jobs. I'm not so sure about what the proposal is for Unilever. It doesn't sound like career-oriented process in there.
I think when you look at your qualified real estate projects, that's where you define.
But also, that Unilever project is gigantic. The multi-purposing that they have talked about in there requires very specialized individuals to work with them to make it happen. And those people don't work at town hall right now. There are going to be people that have to be brought in to deal with their specifics. As I'm imagining at the old Morgan site as well.
You're
That's a
talking about
huge-
building fees specifically.
I'm talking, and those building fees offset the costs to
And
the
you
town
cannot-
of overseeing the
But you
process.
cannot waive building fees.
No,
so
I
those
know
fees
that,
will
I know
still
that, I know
continue.
that. But my concern is it's just going to open a can of worms. As a matter of fact, it also says, if I'm reading this correctly, in this Bluefield article, town attorneys weary that the abatement will be compared to the new Niagara something a few years back, which that was apparently very controversial and turned into a big deal when they did give an abatement in the past. These
So are
things
you
don't
gonna-
flow smoothly.
Are you opposed to an abatement? I'm not sure what you're
I'm
saying.
reluctant, I'm extremely reluctant because I worry about Clinton crossings and ShopRite, which just changed hands, and Stop and Shop, which just changed hands. I mean, they're gonna come and say, hey, look, we just made huge investments and we
You
didn't.
can, but you can't do it after the fact.
I know,
And you
but
can't change the past. You can, all you can do is move forward for the future and make our environment in town more business
I
friendly and
understand it's a
attractive.
huge headache to do individual abatements for properties. That's a big,
I don't want to say it's a headache, it's just, when you're talking accounting, we love, some of us are very specific, and we like programs that, really define very nicely, but no, I mean, it can be done. It certainly can be done, but my
well,
big
just
thing
say
is
if we have a policy in place, every person is going to apply for that. And it's going to turn into a
It's not,
turn into a commission of its own.
but it's not every person because you've defined the types of uses,
Well-
you've defined where they are in
If it's
town.
a restaurant, if it's a warehouse, if it's manufacturing, I mean, this is pretty comprehensive. This sounds like just about everything.
In those focus
What
areas
doesn't
of
it
your
cover?
development.
It does extend businesses. It does promote investment in the business because, as I said, I mean, right now, they're paying $100,000 in taxes, and the restaurant wants to put on a whole new kitchen. And that means their property tax, whatever the GEH is or whatever one it is on that, the property tax therefore would go up. That they would be able to apply for a tax fixing on the additional increase in investing in their business. So it could be anywhere from 0, still within this process, or it could be 50%. And the ultimate end game kind of is, suppose their taxes could be assessed at $150,000, we'd only charge them $25,000. The $25,000 would go nowhere, or the $25,000 we could put into an economic development fund, which is the way a lot of towns do this. They basically take the money, they don't charge the person for it, they put it into a fund. We start generating our own business. We start generating our own kind of fund, but it's not to go to, say, Mike Nuzzo, well, he didn't own property, but to say, look, you want to
Take
double,
Nadas, for
no,
instance.
you want, they want to
septic.
double their size, they want to do something, they put $100,000 worth of septic in there, and they want to put another one in, you want to pay the taxes on that. You're going to pay a percentage of it, so it's, it incents not only new business coming into town, but it incents current businesses to grow without having an onerous tax bill. So, and basically for your income, it's a flat line. We're not cutting into their taxes, just like we're not depleting the tax revenue we're projecting on the BOS's property. It's minimal amount. But so, I mean, it is something, it's almost like when you're the first guy to sign up last, no analogy here, but it is that. So you go to a restaurant, they say, hey, you can apply for it. You can get tax abatement if you just want to invest in business. You do investing. This is basically for investing in the town. It's not for basically, you can't go back and cut taxes and pass less for brand less changes. But I mean, that's kind of like the way it should be sold. This is a very aggressive, but a very professional and also very much needed because most towns have things like this. It's not, well, let me figure out what I'm going to do in the back room, the door's closed, like we've been doing for the last 20 years. Everybody gets a different deal, and it's.
I'd like to see that.
I think it's good.
Well, I mean, I don't know what happened with Milano.
Years.
There's one. Milano was supposed to get a tax deal for one administration, the other administration says no, right? You can't do things like that and have, because that kind of like,
It's gotta be a level playing field.
you gotta have a cod. Something has to be codified so people know what they got. But the real addressing Carol's point is, if somebody wants to increase their business, they won't have to have the big hit in taxes on it. Those are the things that can be negotiated separately. They don't have to be flat.
So Carol, what I would say.
I think it's a good policy to have procedure in place.
So what I would like, Carol, is if you have specific issues with any of the uses, then please bring them back to us and explain what you think should be changed in it.
I think that
or
there should be
locations.
a guarantee of some sort. I mean, if somebody gets a tax abatement and they net in the first year or whatever it is, and then 3 years later they're gone.
So callback thing.
That's,
yes.
yeah. How about folks, why don't what we do is, on Monday, if you could have your recommendations on this abatement sent to me via Mary, anything that you're concerned with specifically, anything you'd like changed. I will then have Mary distribute it to EDC, maybe we can have a meeting with EDC and Kevin Bielmeyer to discuss it.
Hank will be back too. Hank will be back next week.
And we have, and that way we can get this solidified, something that the Board of Selectmen is happy with, something that the tax collector's office can work with as well.
Completely off target. But you've got people on Short Road that are buying a house for, I mean, multiple places, buying houses for $900,000, ripping them to the ground, building a new house for $1 million. But they're, or you've got someone who buys a house for $150,000 in a nice location, puts $100,000 into it, now they've got a $400,000 house. Why? It just seems like I understand, this is building business, this is economic development, this is all that the town is looking for. It just doesn't seem
Are you saying we should
fair
provide
across the board.
tax
I can see a lot of
reduction
people having a
to
lot of
residential
problems with
homes?
this.
I would be
It's
very
it's
adverse.
just a can of worms.
These are the same people
Wait,
that
can I,
complain
can
that
I,
town hasn't grown.
wait. If we're talking about a residential component, there are benefits that have been created through state statute to address residential reductions in taxes. They have every ability to apply through that programming. Also, when you're talking about a residential component, there is a cost to the municipality to continue to provide services to residential components. From schools, to our social services, to our roads, DPW, police department, which is on a very different level than a business bringing in employees and generating taxes, not just through the taxes of the personal property, the buildings, but also the ancillary uses that are going to be the knock-on effect from it, both businesses that are going to need to support that business, from food services to shopping, etc. There's a lot of knock-on to a business investment versus the residential component. But like I said, I would like everybody to take the opportunity to get back to me through Client Mary on Monday as to any of your very specific concerns. We will channel to EDC. Maybe EDC would be interested in having special meetings up to the chairman, or if you want to do it at your next meeting, I don't know how robust of a conversation it would be. And then provide those guidelines back to the Board of Selectmen so that we can.
A special meeting would be better, because we're into September, we can get a quorum together and meet on this. It's important, and it's important that the Board of Selectmen embrace it somehow. I mean, we could never get Carol to agree, but if we can't, then we have to. Well, it has to be.
There's no perfect.
It has to be something that everybody says there's something for everybody. So this is the beginning of a stab at it, and I think it's pretty good. But it could be everything be adjusted. So we just have something on paper say yes, we have a program. Here's what it is. And don't forget, not everybody can get it. They still have to vote on approving somebody's application for this. It's not carte blanche. You have to come in and say why you should be considered for this. It's something like a planning and zoning special exception kind of thing. Why should you?
Now, just two things. Is it possible that we three can see your draft for your abatement program? Number one. Number two, Lisa has been in touch with several assessors.
Several assessors, well, because I work for Groton, which has done these programs with Pfizer and General Dynamics. Don and I are supposed to get an email from Mary with some great help that we'll share as soon as we get it. And, they're great. It's great to be able to lean on other towns to help us out in this situation.
So Hank Teskey, who's on our EDC, is the person who will craft those proposals. So he's very.
She's an equal to both guys.
Yeah.
He's very.
Of course, they also have equal amount of lawsuits against the town of Groton, just saying.
And there's the legal cost.
There's the legal side of it, but at least, it's the town that's been, or city that's been doing these things for years, that we might be able to borrow some things from.
Yeah.
All right, well, thank you, everyone.
Yeah, just one very obvious comment. We're not an island. I hear Carol's concern. I think it's a valid concern. But we're not an island, and if other towns and cities are doing this, I don't see how we have any choice but to compete with them and offer some sort of program.
This video provided as a public service by Kirk Carr, the Kirkster. Thank you for watching.